everyone. Welcome back to the Chain Reaction Podcast. I'm your host, Tom Shaughnessy, a co-founder at Delphi Digital, where we're 5 full-time analysts focused on institutional crypto research. If you aren't a subscriber, you're missing out, so visit the site while you're listening. One quick housekeeping item. This podcast is strictly informational and educational and is not investment advice or solicitation to buy or sell any tokens or securities or to make any financial decisions. I may personally own tokens that are mentioned on the podcast, and you can view the show notes for our full disclosures. Side note, as the podcast has grown, we're looking for a lead sponsor. If you're interested, DM me or tweet me on Twitter for more information. With that out of the way, today I'm thrilled to have on my partner and a co-founder of Delphi Digital itself, Kevin Kelly. Given Kevin cut his teeth as an equity strategist with Bloomberg, he offers unique and differentiated insights on the institutional and macro argument for crypto and Bitcoin. Kevin offers his take on the global backdrop, everything from underfunded pensions to global monetary policy, and even the eventual potential dethroning of the US dollar. We go on to where Kevin believes crypto and the global economy will coexist in the future, and what would happen to crypto if a recession hits. With all the endless tech and projects out there every day, this episode was a breath of fresh air as Kevin offers an extremely zoomed out view of where Bitcoin fits into our institutional world and the broader global monetary framework. One of my favorite parts about being a part of Delphi Digital is the diverse nature of all of our partners and co-founders. Kevin brings his unique insights this episode, so I hope you enjoy it. With that, let's jump into the episode. Hey everyone, welcome back to the podcast. Today I'm thrilled to do an in-person interview with my partner Kevin Kelly, who has a storied career as a strategist at Bloomberg, and he is extremely differentiated, and he brings the global, the macro, and the institutional arguments and appeals to this space, which I think is entirely differentiated versus a lot of the tech and developer podcasts and info we have out there. So with that, let's dive right in. Kevin, give our listeners your background.
Yeah, no, absolutely. Appreciate having me on here, Tom. And feels like a little bit of inside baseball here, but got a couple of beers going, so we're good to go. We're ready to rock and roll. But So I mean, I previously, before co-founding Delphi with you and our other partners, I did U.S. equity strategy, which is basically an arm of equity research, but rather than looking at specific stocks like Apple or building up bottoms up type models. I basically looked and did analysis and research on global stock markets and global stock market trends. A focus primarily on the U.S., but as we know and as we've talked about, it's relevant in the crypto market. It's relevant in other markets where nothing really operates in isolation. So really kind of looking at kind of the global macro backdrop and seeing where, the U.S. equity market within the sectors and industries within the U.S. equity market would outperform or underperform based on, a number of different factors. And so that was kind of my background. And so naturally just kind of being a more of a macro type guy, it was pretty easy to see how I kind of fell down the crypto rabbit hole a few years ago, just given the kind of macro backdrop we found ourselves in then. And now I would say has escalated quite dramatically in the last few years, which I'm sure we'll get into in this conversation. But yeah, no, really excited to be here. Really excited to kind of get this on tape because as I could talk about this stuff for hours and hours, and I've bored you countless times with some of this stuff. So
definitely not boring, just definitely not my strong suit. But that's why I appreciate your outlook here. So let's dive right into the first half of the podcast. Let's discuss the institutional argument for crypto. So crypto is obviously a retail-driven movement and an anonymous one to begin with. Where are we along the institutional adoption perspective in your mind before we dive into why exactly institutions should own this asset?
Yeah, absolutely. So everybody loves kind of, baseball references. So if we had to put it in an inning for the institutional kind of adoption curve, definitely think we're in the early days, right? Obviously you haven't had, first or second inning, you haven't had institutions really come in flux for a number of different reasons. It's a really interesting, kind of emerging asset class, specifically around Bitcoin, because you don't have, A, it was a retail-driven market to begin with, like you mentioned, but B, you have actual mandates for some of these institutions that don't allow them to actually invest in this space yet. So they're almost kind of guarded off because of, custody reasons, not being able to figure out how to kind of value these things and integrate them into, multi-asset portfolios. So institutions are starting to get more comfortable with this space, specifically, kind of starting at the top with Bitcoin, understanding what it is, understanding it not only from kind of a growth asset perspective, but also is almost like a hedge against some of the kind of monetary experiments you could say that are going on. Not only in emerging markets where you see you constantly hear about hyperinflation and things of that nature, but also in the advanced economies like the U.S. There are a number of things that I think are going to kind of escalate the risks for currency devaluation globally that I think a lot of the institutional guys are starting to really wake up to, that this could be just a portfolio hedge and not even necessarily something they're in for kind of the growth aspect of it.
Makes a lot of sense. And just to set the stage for your baseball reference earlier, a lot of people in crypto hear about the larger funds, whether it be Pantera or whether it be Placeholder with 150 million under management. How large is that compared to traditional institutions? Like when you talk about the Goldmans and the JP Morgans getting involved, what's like the relative size here compared to the funds we have now and the institutions versus what you think we'll have in the future?
Yeah, it's to try and visualize this. This absolutely will not be to scale, but I kind of think about it as if you're going to stick with a baseball reference, it's kind of like a basketball sitting in the middle of the infield, and if the infield is kind of the larger global asset pool, right, in terms of crypto, because yes, those funds are very prominent in this space, and certainly you're going to have institutional investors kind of coming in a more indirect way by investing in some of these funds. We definitely think that's going to accelerate going forward, but it's still again a very, very kind of nascent asset class, especially kind of the publicly traded side of things. It's at the global crypto market, publicly traded crypto market is somewhere north of 300 and I think $320 billion, as of this week. So it's still very, very small, right? I mean, the amount of cash that Apple has sitting on its balance sheet, for example, is over 200 billion, right? So when you kind of put it in that perspective, there's definitely a ton of asymmetric upside for Bitcoin in the broader crypto space, and it's kind of pales in comparison to the amount of assets under management when you look at kind of the global asset pool.
That makes a lot of sense. We're definitely early. So building on the institutional argument here, what are the key reasons in your mind why institutions or traditional institutions that aren't involved should purchase Bitcoin, should get involved? Does it just come down to diversification, or does it extend to the returns? What are the key factors in your mind?
Yeah, no, it's a great question. I think some of the key, there's two ways to kind of go about this argument, at least in my view. The one side is, and you touched on this kind of in the intro, the technological side of things. I look at this more so almost as a monetary, advancement rather than just a technical one, or technological one. But, obviously the technology and being able to, have some type of non-sovereign, decentralized, potentially, store value type asset, that isn't tied to any one kind of government. I think is certainly a use case that you're going to see, institutions kind of come around to, and the technology itself actually enables that to happen, right? Enables those kind of qualities or characteristics of Bitcoin. One of the interesting things I think is you can come at it from the other direction. You say, okay, if you're sitting there and you're, let's say, a pension fund, for example, right, and your required rate of return that you're trying to get on your portfolio is somewhere in the 7 to 8% annualized range, right? So annual returns of 7-8%. When you look out over the next 10 years, right, we've been fortunate enough to come through the last decade or so, this pretty massive bull market and a number of risk assets. Global bonds have also done really well. So you've kind of had this kind of everything bubble start to inflate. And so what I think is that people oftentimes assign this kind of recency bias and say, well, things are going to continue to be hunky-dory and they're going to go well and we're going to have similar returns over the next 10 years. And if you look at just historically how different asset classes have performed, the next 10 years look a lot more dire than these prior 10, right? So if you're sitting there with a multi-asset portfolio again, and you're trying to figure out, where you're going to allocate, whether it's more to stocks or to bonds or maybe get some commodity exposure, people are piling into gold right now for very similar reasons to the argument for holding Bitcoin or investing in Bitcoin. I think that's one of the things that you kind of have to take into account too is the opportunity cost, right? So where else are you going to put your money? And what other asset classes are really going to give you or help get you to that 7 or 8% return? If you're investing in, U.S. treasuries, right? So U.S. government debt that's yielding sub 2% now on a 10-year. that's going to be a weigh on your portfolio, right? If you have, let's say, a 20 or 30% allocation to that, it's going to weigh on your portfolio. You're going to have to make up for that lost kind of return potential in other asset classes. And I think this is a reason why you've seen, investors kind of move further and further out the risk spectrum, which, it's not a one-to-one correlation, but certainly has been one of the reasons why I think Bitcoin has even kind of, risen to its prominence today, is because, you've had people kind of getting further and further out the risk curve, and you're not seeing the types of yields or return that they would want to see, in government debt, for example. They're going to get pushed further out the risk curve. You're going to get into growth assets. You're going to get into something like Bitcoin. So, kind of tying it all together, my argument is if you look across the spectrum of different asset classes, it's very tough, to see without going very heavy into private equity or venture capital, where you're going to really get those kinds of returns over the next decade or so. And Bitcoin, again, with the kind of asymmetric upside that it presents, is certainly something that I would advocate based on again, whatever the risk profile is of the institution. But having a 1 to 3% allocation, something like Bitcoin, certainly makes a whole lot of sense when it comes to responsible portfolio management.
That makes a lot of sense, especially as investors move out on the risk curve. What's your take on, the equity market has seen some enormous returns over the past couple of years. FANG stocks are dominating. Everyone's facing or looking for the next Twilio. In your mind, if equities continue to, say, outperform, or there continues to be massive interest in tech equities moving forward, does that negate the case for Bitcoin with its outsized returns, or does that still offer an opportunity for Bitcoin? I think a lot of people are kind of expecting a recession, which we can get into later, but I'm interested to hear your take on whether or not Bitcoin can still attract institutions if these popular tech stocks and FANGs continue to just basically drive results.
Yeah, no, great point. And I think it certainly can. And again, hindsight's always going to be 2020, and we may look back 5 years from now and say this hasn't been the case. But I think what's interesting, if we take a step back and put the kind of FANG trade or the tech stock trade in perspective, one of the reasons why, tech and FANG, which are considered more kind of, again, those growth assets, right, those growth stocks, why growth is really, really dominated over something like value over the last, really over this entire cycle, over the last decade, is because the kind of economic backdrop, right, the amount of economic growth we're actually seeing, specifically here in the US, but also kind of globally, has been relatively tepid, right, compared to prior cycles. So again, if you're not getting this growth from, your typical asset, you're going to get pushed further out. We'll call it the growth spectrum, right? If you're looking at value and growth on a spectrum, you're going to get pushed into some of these FANG names, these tech names that are actually offering above average growth. Whereas if economic growth was stronger, the value trade would probably come back into the limelight. And so what I think Bitcoin's really in a very unique position for is, as it gains prominence, right? Again, we talked about how it's still very small. The awareness among institutions is certainly growing, but it's not, anywhere where we expect it to be, 5-10 years from now. And as it transitions from this kind of, speculative asset to more of a kind of store value narrative, I think it can actually benefit from both scenarios, right? So if you had this kind of more risk-on growth trade come back into the limelight. Well, if you're a growth investor, I definitely think you're looking at something. We've talked to people who are, again, running, large amounts of money, saying we are looking at Bitcoin as a potential, a small addition to a growth type portfolio. You're going to have the demand there from some of the growth investors, right? If the tech and the FANG play comes back in. On the flip side, we're also seeing, especially recently, Bitcoin kind of its value proposition kind of play out right in front of our eyes, right? Because you've seen, just based on rising trade tensions and, a lot of uncertainty surrounding, the economy going forward, and when are we going to have a recession? Is it, 12 months from now? Is it 6 months from now? Is it 24 months from now? No one really knows. As we see some of these kind of geopolitical risks also increase or heighten, you've seen Bitcoin actually catch a bid and is traded much more in line with gold, right? So it's kind of in this really unique scenario here where, again, if the growth rate, continues or comes back, you could certainly see Bitcoin catch a bid as growth investors get into it. But you could also see it really kind of outperform if, you continue to see rising uncertainties across kind of the macro backdrop. So it's a tough question to obviously, put a definitive answer around, but I definitely think it can benefit from a number of different, macro factors that are going on.
That's awesome color, and definitely helps me especially understand that moving forward. So one last question on that, Kevin, on the institutional side. For institutions getting involved, legacy hedge funds getting involved, there's clearly the factors in place that will drive them there, whether it be the uncorrelated asset of Bitcoin or whether it be the outsized returns. But I think one thing that's keeping hedge funds and institutions at bay is kind of internal conflicts. Like, why would a hedge fund or an institution just buy Bitcoin and hold it? Like, how are they going to make value add money on that? Like, are they going to have a quant fund or are they just going to buy it? How do you wrap yourself around the internal conflict for a fund to write to their investors in their quarterly letter, hey, we're allocating to Bitcoin, we're going to hold it. You don't really need us for this, but here it goes.
Right. No, absolutely. And I think, again, if we put it into more of a kind of multi-asset portfolio construct, right, where you're not just, let's say, a portfolio manager not just holding, Bitcoin in isolation, they're combining it with, their allocations to stocks and bonds and the like. I think one of the things that we're touching on earlier, where you have U.S., for example, U.S. government debt, the yields on U.S. government debt being so low, that actually kind of represents an opportunity cost for holding what we consider non-income producing assets like Bitcoin and like gold, right? So if you have this kind of this macro backdrop of monetary policy shifting much more dovish away from tighter monetary policy, which I'm sure we'll get into in a few minutes. If you have government treasury yields, I should say U.S. treasury yields, and then government sovereign debt across the world declining. So the prices are increasing, but the yields you're getting are declining. That represents the opportunity cost of holding something like Bitcoin, right? Because again, it doesn't pay a dividend. It's not one of these kind of value type stocks. So when you look at when you're trying to make that argument to investors, I think that the fact that you're not really getting a ton of yield elsewhere, on top of this whole threat or hedge against advanced economy or developed economy currency devaluation globally, including the U.S. dollar, I think that certainly can make kind of the base case for at least having a small allocation to Bitcoin.
That makes perfect sense. And Kevin, before we go on to the macro argument here and sway from the institutional one, what do you think your timeline is in your mind to see real massive institutional adoption? Like, is it a set date in your mind? Is it more of a slope? How do you think about it?
I think a lot of people, especially that are, more kind of crypto-centric in this community, almost look at the institutional investors as a wall of capital, right? Is this just going to be this tidal wave that comes in, and you're going to kind of once you get an ETF approved or something of that nature, you're just going to have the barn doors come down and everyone's going to flood in. I don't think it's going to be like that, because again, if you're thinking about it from a responsible kind of institutional investor standpoint, risk manage. You have a lot of strategies around risk management. Not only looking at the returns but also managing the risk of the portfolio. That's not going to go out the window just because, the opportunity to invest in Bitcoin becomes, whether it's more accessible or easier. They're still going to have to go through their due diligence process. And a lot of these institutions, it's not as simple as just saying, hey, we actually think there's something here with Bitcoin, or, some private or VC type crypto deals. We're just going to get into this space. There is a process that goes behind it, right? For adding, whether it's updating, their kind of internal mandates of what they can invest in. It's going to, their committees and their boards and saying, this is why we think, from a responsible investor standpoint, why we think we should be in Bitcoin or crypto. It is a bit of a process, right? So it's going to be a little bit long. I'd say my timeline's a little bit longer than I think, probably the average person who's in crypto right now, or the expectation from the average person in crypto right now. But I wouldn't be surprised if we saw, again, let's say we get an ETF or some type of, investment vehicle approved within the next, let's call it 18 to 24 months. I definitely could see in the next 2 to 3 years, real institutions, coming in kind of in size and really growing the pie of crypto. And I think, I'm of the opinion, we've seen this in some of the conversations that we've had, with some of these institutions. I think it's going to get to a point where you've obviously had a FOMO trade on the retail side, right? The fear of missing out, where as an asset grows and Bitcoin's price grows, people say, hey, have I missed this trade? And they tend to kind of get in late, right? They're trying to kind of catch the top or trying to benefit from this kind of momentum trade. And I think we're going to see with institutions is kind of this longer term, almost kind of FOMO trade, where you're going to be on the hook if you're an institution, call it 10 years from now. Let's say Bitcoin does everything that we think it can and accrues the amount of value that we really think it can, or even, a fraction of that value. I really think that institutions are going to be on the hook, and they're going to have to be able to explain kind of where they were throughout that whole timeline, that whole process, where other, competing firms were getting in or investing in this space. They're going to have to answer for not only, why they would have invested in Bitcoin, but the flip side of why they didn't, right, and why they sat out. And I think that type of pressure is certainly going to continue to build as, we mentioned that the value proposition of Bitcoin kind of plays out, right in front of our eyes.
That's awesome, caller. Yeah, the career risk when we both left our positions, I think, was, why are you going? And now we're talking about institutions that have to now argue why didn't they get involved?
Yeah, it's a total paradigm shift, but it's great to see, right? Because this is, obviously we both jumped ship from kind of the traditional, equity research world because we had so much conviction in what this asset class could become. So it is kind of nice to see, obviously that the fruits of that labor, I guess you'd say, starting to kind of come to fruition a bit. Even though it hasn't been, too long since we were on the other side of the coin.
Yeah, totally true there. So not to downplay the argument here, but just to put it in perspective for people when institutions do get involved. Bitcoin's at a $200 billion market cap. Let's say a pension fund wanted to allocate, let's say $1 billion or $5 billion. How does this work from an institutional perspective versus a retail perspective? Because I think a lot of retail traders kind of assume, if 10 billion or a billion wants to inflow, Bitcoin's price is going to go through the moon. But in reality, it's not really how it works on the institutional side.
Yeah, so there's the reflexivity argument, which I certainly think has some merit because you've seen it in other asset classes too, which basically says, if you had, let's call it $1 billion that comes in and your reflexivity is somewhere in the 20 to 25 range, then you would have, kind of 20 or 25 billion dollars worth of increase within, Bitcoin itself, right? So that's kind of your reflexivity argument for a number of the reasons, why I mentioned FOMO, being part of it too, because you can get these momentum trades and you get people kind of behind them, and momentum, especially in a sentiment-driven market like crypto, is extremely powerful, as we've said time and time again in a lot of our reports. And so kind of betting against momentum sometimes can be tough. But I would say, what's great too about this time around is that the infrastructure, as we've seen, continues to get better and better every day, not only from kind of the UI standpoint for, retail investor or consumer or somebody who's actually starting to transact with Bitcoin. You've got all these things like Lightning Network coming online, and there's a number of different UI improvements that have certainly grown recently. There's also a lot of infrastructure being built out on the institutional side, right? So 3 years ago, it would be very, very difficult for an institution to be able to allocate that much money, that size of a position, in this market because you just didn't have, the infrastructure built out. But now you've got, a ton of, different OTC desks that have developed really strong relationships with a lot of these, larger institutional players, even if they haven't quite made the commitment to jumping in or even dipping their toes into Bitcoin yet. So the infrastructure is there, right? So even allocating something like, $1 billion to this space, it would certainly move the market to a degree, but I definitely think that there are ways in which, that movement maybe would be a little bit suppressed, so to speak, just because you have some really great infrastructure that these institutions are used to dealing with in any other market.
Makes a lot of sense. So let's switch over from the institutional argument to the macro argument. And I'm going to reference your piece a lot here, the institutional case for crypto that we have in our members portal, because I thought it was amazing, obviously. So let's get into that. When you think about the macro argument for Bitcoin, what are like the top 3 or top 4 main factors you think about? You already talked a lot about expected returns. You mentioned underfunded pensions, global debt, and the dollar's dominance, which I guess we could talk about later. But I guess what are the main macro factors you think about here?
Yeah, so a lot of my kind of longer term, and I'm of the opinion, again, just being kind of biased to the macro argument, I think you have to have a pretty good understanding, or at least a decent understanding of what's going on in the global macro, backdrop that we find ourselves in, to have a really a real kind of long-term outlook or potential value proposition, be able to understand the potential value proposition of something like Bitcoin that goes beyond kind of, again, the technological side of things. And the reason why I think that this time is pretty much primed for Bitcoin to thrive is there's a number of things that are going on that are going to threaten the kind of value of currencies in both advanced and emerging economies globally that we haven't quite necessarily seen play out yet, right? So you mentioned, the U.S. dollar's dominance, and most people at this point know that it's considered the global reserve currency. But one of the real reasons why that is there's a few reasons. One, a lot of global trade is settled in U.S. dollars, right? So they look at the oil market, for example. A lot of commodities are settled in U.S. dollars and traded in U.S. dollars. Oil being one of the most significant. But one of the real kind of reasons why it's a global reserve asset, which basically means, or reserve currency, which basically means that central banks have been holding this as an asset on their balance sheets because they want to be able to have some type of liquid instrument that they can either buy or sell, to kind of manage their own monetary policies to a certain degree. But one of the reasons why, the U.S. dollar is a global reserve currency is because of the demand for U.S. government debt. And when you look at, one of the most liquid markets on the planet, not only on the foreign exchange side, which is the U.S. dollar, but when you look at U.S. treasuries, that is kind of the gold standard in terms of, reserve assets right now. And so that, gives a bid to or gives support to the U.S. dollar as a global reserve currency because the demand for U.S. Government debt is so high, right? And it's been that way for a long time. And people make the argument, this is kind of, I won't go off on this tangent because we could do a whole nother, segment on MMT and kind of modern monetary theory. But one of the kind of arguments that's been really kind of propping up recently is, if the government, why can't the government just print, endless amounts of money? Because again, we are the global reserve currency. We can just print endless amounts of money and be able to kind of fund the finances of the government, and you'd be able to do so many things, right? UBI, a number of these arguments that are kind of propping up now in the political landscape, and to a certain degree, you can do that, but I think what people kind of often miss is the long-term implications of that, because the U.S. is externally funded to a large degree. And what I mean by that is the holders of U.S. government debt, right? The government issues, treasury bonds to be able to fund some of these things, a lot of their expenditure, and the holders of that debt are some of the largest kind of foreign nation superpowers, right? So you look at China, for example, which is one of the largest holders of U.S. treasuries. Now, I don't think China is going to sell out of that, a lot of that treasury position anytime soon for a number of reasons. But we are kind of handcuffed to some of these foreign entities, and so this kind of ties back together. Why the U.S. dollar is a global reserve currency. It really lies kind of on the demand side, right? So the U.S. can continue to print money, we can continue to issue more treasury bonds, and the market will eat them up because there's such a high demand for them, right? Because it's such a liquid market, because the U.S. Treasuries being a kind of global reserve asset, there's always going to be a bid for those, or at least people think there's always going to be a bid for those. What I think we're starting to see a shift in is people moving away from the U.S. dollar, right? And you see this with China specifically, but a more extreme example is Russia, that's pretty much sold out of all of its treasury holdings and is now buying up gold. And global central banks are buying gold at the fastest rate in decades, is because the world's kind of trying to move away from the dominance of the U.S. dollar, right? Because what that allows the U.S. to do is weaponize it to a certain degree, or use it for our own kind of advantages, right? So a lot of people in this space will talk about the SWIFT system and how that operates, and without getting too into the weeds there, basically what the U.S. can do and has the power to do today is basically look at countries that it's put sanctions on and almost kind of cut them off from the global financial system and global financial markets because of the dollar dominance and how important it is in global trade and all these other things. And so what I think you're going to get to a point is the risk of printing more money and running these large kind of budget deficits. What you're going to get to is a point where a lot of the demand kind of starts to, or some of the demand starts to dry up on the foreign side. And what that'll do is it'll kind of shift the sentiment away from a strong dollar to a weaker U.S. dollar longer term. And there's not a whole lot of structural things that we can do. We can't really grow our way out of that. So the only really way to get out from under this kind of large debt burden that we found ourselves in is to inflate away the currency, right? And everyone talks, inflation's a word that's thrown around a ton in the crypto space. And why is inflation potentially bad? I mean, it diminishes your purchasing power over time, right? So I think we're going to get to a point where these rising debts, eventually, as you see global central banks now and monetary policy move back more towards, rate cuts and potentially additional stimulus like quantitative easing, you're going to see, that real threat of currency devaluation fall. And currencies are often marked against each other, right? So one of the reasons why, again, the U.S. dollar is the reserve currency of the world is because there hasn't really been, an alternative that could step up. It hasn't. The pound isn't something that you would look to. The euro obviously has its own problems. The Chinese yuan China's still kind of a very closed system compared to some more open economies. So it hasn't really been anything that's really threatened the dominance of the U.S. dollar. And now I don't think fiat's going anywhere, and I don't think we're going to have Bitcoin is kind of this one ring to rule them all universal currency that's only used. I definitely think that the longer term potential value proposition of it as a alternative digital reserve asset continues to grow almost by the day, because when you look at all these other things that are happening, with irresponsible both fiscal and monetary policies.
That's incredible insight. And I don't think a lot of people, including myself, really think about the US dollar being weaponized on a daily basis. And I don't think we really think about the demand characteristics for the US dollar. I think a lot of people think about it more from the supply side. When you think about this potential slippery slope where the US dollar begins to lose its, throne here, how do you view that? Are you seeing that now already, or are you seeing that kind of as a long timeline? I mean, this market is massive. So if Bitcoin were to garner, a small percentage of that or those outflows, that could be a huge deal. But I feel like it's very hard to track because of the size of the market.
Yeah, and I wouldn't necessarily even toss around what that potential market could be if it replaces a certain amount of, let's say, the global money supply or something like that. But I think to answer your question, I think it's going to be a longer term kind of dethroning of King Dollar, right? And here we are, July 4th week. Nothing says, Happy July 4th, like talking about, the downfall of the U.S. dollar here. But no, I think it's going to be a much longer process than most people think. And actually, in the short term, there's what's considered a global kind of dollar shortage. So the world is short on dollars because there's a lot of dollar-denominated debt out there from different emerging markets and the such. There's actually a global shortage of dollars, which could give the U.S. dollar a bit of a bid compared to other currencies in the short to medium term, right over the next, and that could be 6 months, a year, 2 years. Where I think this kind of starts to play back into the global central bank pivot towards more dovish monetary policy, which basically means being more accommodative, lowering interest rates, potentially, more quantitative easing or stimulus. Where I think this kind of plays in is that the dollar itself, because it's kind of a double-edged sword, because it's so dominant, because it's a part of such an integral part of the global financial system, a strong dollar is actually pretty bad for the global economy, because if you have dollar-denominated debts in emerging markets, right, if the value of the dollar increases, the amount of kind of relative debt in their local currency increases as well, which can certainly reduce capital expenditure. It can hurt economic, which by nature could hurt economic growth. So a strong dollar is not actually bullish, you could say, for the global economy, and the U.S. knows that, right? The Fed, Jerome Powell, who's the chairman of the Federal Reserve, knows that, and so as independent as the Fed wants to be, they're a bit handcuffed to what other global central banks do as well. And if you look at Europe's going through a number of struggles and continues to struggle getting inflation off the ground. And part of that's because they can't really generate a ton of economic growth for a number of reasons, demographics being one of them. But, the big picture is if the Fed is kind of handcuffed towards what other global central banks are doing, and other global central banks like the ECB are moving much more towards, more accommodative monetary policy. Well, if there's a divergence there, right? If the Fed continued, let's say, to hike interest rates, and interest rates are falling globally, well, then that's going to give, a support to or bid up the dollar even more and make it even stronger relative to other currencies, right? Which, as I mentioned, is not good for the global economy. So there's a certain kind of, I look at Jerome Powell, and I've joked that I think he's got one of the worst kind of white collar jobs in America, because, the amount of stress I can only imagine what this guy's going through. He's in between a rock and a hard place, because on one side of the coin, he doesn't want to necessarily, cut interest rates because, he's been bashed by President Trump to ease monetary policy, and President Trump's pointed to China and Europe and some of these other nations for what they're doing. But at the same time, he can't necessarily, raise interest rates without having, this growth backdrop or this inflationary backdrop to justify it. And at the same time, if you have those other global central banks moving away from tighter monetary policy, it just kind of adds another layer onto his plate of, if I continue to diverge from other central banks and kind of global monetary policy, the dollar is probably only going to get stronger from here. So there's a few things that could actually make the dollar or increase the value of the dollar in the short term. But again, going back to this kind of longer term narrative, right, which is really how I look at Bitcoin in this macro backdrop. There's a lot of structural things and structural weaknesses to the U.S. dollar that I think are going to start to play out. But that timeline is probably going to be more years and not months.
Kevin, we have to switch to normal conversations to the Telegram. I'm learning way too much right now. So that's excellent color. And, for someone who's not particularly well versed in the macro outlook, myself and potentially people out there, it seems like a very vague dynamic between what the U.S. government can and can't do and how eventually Bitcoin will play into this. How exactly do you see this playing out? Like, do you see the government buying up Bitcoin? Do you think individuals in America should buy Bitcoin? Where exactly do these two meet? Because the ultra dystopian view of Bitcoin taking over and the U.S. government collapsing, who's going to pay for public works and police and firefighters? How do you view that dynamic?
Yeah, I mean, I definitely wouldn't put myself in the camp of that, I guess, kind of extremism. How I kind of see this playing out over time is, and this will be, not necessarily a domino effect, but kind of almost happening simultaneously, is I think you're going to see, as, I mentioned, other central banks and other nations are buying up gold, right? So I think they'll also start to consider buying, whether it's small positions or small allocations to Bitcoin as well, to kind of support that, not only just to move away from the U.S. dollar, but also, as a portfolio hedge, right? Because central banks also want to be diversified to a certain degree. I think you're going to have foreign nations potentially start to get into Bitcoin. That's kind of the longer term use case. But at the same time, I think even if you remove Bitcoin from the equation, I think just the path that we're on in terms of the path the U.S. is on in terms of the amount of debt issuance, and again, not being able to kind of grow our way out of that. And the U.S. is most likely not going to default on its debt, at least just given its history. It's probably going to be inflated away, right? And what that basically means is that it's going to lose its value, relative to some of these other currencies. I think as the demand for kind of U.S. government debt, and as foreign nations and foreign buyers really start to question the ability of the U.S. government to potentially ever pay, 22 trillion plus, in terms of government debt or national debt in order to pay that back. As you see, skepticism rise for the U.S. to be able to pay back its debts, I think the demand is slowly but surely going to kind of start to diminish, right? And that's kind of where you're going to start to get some of this dollar weakness. And what kind of rises up in the dollar's place is still very, I think, up for debate, right? I don't necessarily think that it's going to be a one-for-one switch, the dollar with, Bitcoin. I think that's a bit extreme as well. Could I be wrong? I mean, absolutely, but that's just not the viewpoint I take. I think you're going to have an interesting period probably where you have, maybe not necessarily dueling, reserve currencies, so to speak, but you kind of have this shootout between the dollar and some of these other major advanced economy currencies, whether it be, the euro or potentially even the Chinese yuan longer term. And I think Bitcoin will kind of play into, that narrative as an alternative, reserve asset, similar to something like gold, right? With central banks holding gold. I don't necessarily think it's going to be, again, this kind of universal currency and one ring to rule them all. But in the meantime, I definitely think as that's going on, you're also going to see, this narrative, which Bitcoin, I think, has the strongest, in the crypto space now in terms of the macro backdrop narrative behind it. You're going to, as you see that the awareness of that narrative grow among, just traditional institutional investors, whether it's here in the U.S. or it's abroad. As you see that narrative grow, they're going to move more towards Bitcoin as well, right? So it's almost kind of like death by 1,000 cuts for the dollar, not necessarily one moment where, one day it's a gold reserve currency and, the next day it's not.
That makes a lot of sense. To zoom way out, and just like a quick question, do you view it as as the US dollar could potentially lose its value over time and governments are just unhealthy in how they're addressing things? Do you think individuals that buy Bitcoin could be better off versus the status quo of their government or of their national currency? Like, is that a good way to think about it? Or
yeah, and again, obviously we do this all the time, but nothing here is investment advice, right? So it's all about whatever your risk profile is, or how much risk aversion, I guess you could say, you have. But that's a great question, because thinking about purchasing power too, a lot of it's relative, right? So if you think about Bitcoin rising, right, we quote Bitcoin in dollars because we're here, but a lot of the market, a lot of participants quote Bitcoin and crypto prices in dollars. It's all relative, right? So you can look at Bitcoin either increasing in value, just kind of nominally, but you can also look at it as kind of Bitcoin increasing in value against these other currencies, right? And I think that's where the long-term value proposition really comes in, is that as you have this kind of this global currency devaluation that slowly but surely creeps up on us, Bitcoin will rise. Similar to, it's a very similar argument to what a lot of the gold bugs have for why gold will outperform. You'll have Bitcoin kind of gain in value against some of these major currencies, and so if you're holding Bitcoin, right, even if it's small allocation, and that price increases, right, relative to whatever your local currency is, well, then obviously your purchasing power goes up, and that's one of the reasons why people make the argument that it is a store of value asset, even though it's still extremely volatile. And I think it's tough to make the store of value asset, argument right now, just because, again, anything that declines, 85, 84, 85%, in a relatively short period of 12 to 18 months, it's tough to make the argument that that's a store of value yet. But I definitely think the value proposition is starting to play out in front of us. And as you have more institutions come in, as the volatility of Bitcoin on kind of a day-to-day basis starts to decline, I definitely think that, again, if you're holding this, relative to devaluation in other advanced or developed market currencies, then your purchasing power is only going to be increased, right? So it's similar to that's what makes this interesting, is that it's similar to other investing or other investments, whether you're looking for a growth play like we talked about in the beginning, or if you're looking for something that's just like, again, a good hedge against currency devaluation and a good kind of hedge against these monetary experiments that are going on. It's kind of Bitcoin definitely benefits from kind of both narratives.
That makes a lot of sense. It's excellent color. And Kevin, building on that, when we look at what's going on with the U.S. government right now, monetary policy, when you look ahead, is there anything that can go, or are there any very bad decisions the U.S. government could make here that would potentially lead people into crypto or Bitcoin? Or are there any potentially, great decisions that could fix the government and, hey, we don't have any need for this anymore?
Well, if I had, the kind of solution for all the problems that our government's going through, I probably wouldn't be sitting here. I'd probably be in some type of government office.
They're going to hire you with Delphi.
Yeah, right. Exactly. So I can't say that I'm, a political expert by any means, but I definitely think, more immediate, right? So one of the things we've been talking a lot about, here internally, within Delphi is how does this kind of, global central bank pivot that I keep kind of harping on, how does that play into the long-term price action of something like Bitcoin? As we start to approach this July Federal Reserve FOMC meeting that's happening at the end of July, right now, actually, the probability of the market is putting on the Fed cutting interest rates, right, which would be the first time, in a number of years, right, because they were originally moving more towards tighter monetary policy, now drastically shifting gears. If they actually cut interest rates in July, which the market is pretty much set as a signed, sealed, and delivered, done deal, I think, that move itself is definitely going to give a bid to something like gold and Bitcoin, because again, you're moving more towards devaluing the U.S. dollar, devaluing global currencies, because a lot of the global central banks are going to follow the Fed's suit, follow the Fed's lead. And I think that's going to give, a bid to gold and Bitcoin. And it also, could potentially, suppress yields even further, right? We talk about, $13 trillion of negative yielding debt. And people ask, what, that doesn't make any sense. How can people even invest in that? And it's a similar argument I've made in the equity markets, where you could say a certain stock or a market is super overvalued, but just because it's overvalued or expensive now doesn't mean it can't get more expensive, right? Some people, I've talked, they're literally buying, negative yielding debt because they think the ECB again is going to pivot and push, interest rate cuts to as much as to the extent that they can, even though they're pretty much zero at this point. Additional stimulus, they could actually see rates go even lower, right, even deeper into negative territory. So the argument there is obviously a bit mixed, but when you look at something like gold and Bitcoin, again, if you think about the opportunity cost, well, if you're holding negative yielding debt, I mean, the opportunity cost of holding Bitcoin is actually a positive, right? Because, Bitcoin's not, it doesn't carry a negative yield with it, right? So if you think about it from an opportunity cost perspective, I definitely think, the move by global central banks towards a more kind of accommodative, easier policy is certainly going to, pressure yields or suppress yields, unless you get, inflation really picking up or some technological advancement that really has economic growth take off. I definitely think, that the macro backdrop, both in the near, medium and obviously longer term, is certainly kind of almost ripe for Bitcoin to thrive against, other assets.
That makes a lot of sense. And building on what decisions can be made or cannot be made, let's say we happen to go into a recession, God forbid a depression, I highly doubt that, but let's say we go into a recession. A lot of people are up in the air about what would actually happen to Bitcoin. It's always been my opinion it would probably get hit at first because people are selling their magic money to pay for food, but eventually people could say instead, this time around, I was screwed over by my government, maybe I should allocate to something that they can't control. What do you think happens?
Yeah, I think I sit more in the camp that I don't necessarily think Bitcoin would rip higher if we end up rolling into a recession here in the next probably 18 to 24 months. Again, just the global awareness and the use case of it isn't quite there yet. And even when you look at something like gold, right, it's pretty interesting. If you go back to economic crises of the past, whether it's 2008, which is one of the probably best examples, but even in recessions in times prior, oftentimes when we first kind of really hit economic turmoil that spills into or market turmoil, I should say, kind of spills over in the economy. Oftentimes, what you see is actually gold falls off as well, right, and sells off because gold's almost used as liquidity, like a liquidity instrument, right? So people are trying to get liquidity wherever they can. Gold's really pretty liquid market compared to some other things like high yield emerging market debt or something like that. So people actually use it almost kind of as a liquidity trading instrument. And I think you could almost see something similar happen with Bitcoin, at least the people that are trading or investing in Bitcoin now. So long story short, I don't necessarily think that Bitcoin takes off as risk assets like stocks sell off during the next market crisis. But I definitely do think that we're obviously going to be very keen on how it does perform and how it performs relative to gold in this next kind of recession. Because again, if it can prove its worth, it doesn't have a long track record compared to something, especially something like gold, but even other traditional markets and asset classes. As that track record gets longer and longer, and it can add more kind of notches to its belt of ways in which it has served almost as a hedge or as a an actual store of value during different time periods. That certainly helps kind of bolster the long-term bullish use case and kind of grows that perception that eventually this thing can be looked at as digital gold or an alternative store of value asset. It simply just hasn't had really the ability to prove that yet because again, Bitcoin was spawned and really took off in what now is the longest U.S. Economic expansion that we've had on record. This month actually marks kind of the longest one, so it hasn't really been tested to that degree. And I'm excited, to say the least, to see what happens to it. And certainly in a recession, I mean, it's not like we're rooting for a recession just to see how it acts, because again, there's job loss. There's a lot of really negative things that come with recessions. But I do kind of sit in the camp that I think we're long overdue for one, because on the other side of a recession in this recovery process, what you can get is a real kind of flesh out of, a lot of, whether it's zombie companies that are basically being propped up by just, easy, low yields low interest rates and very easy, ways to get access to capital, especially in the debt markets. I think we kind of need a recession at this point to kind of wash a lot of that out. But definitely going to be interested in obviously watching closely how Bitcoin reacts, when Judgment Day, I guess, finally does come.
Makes a lot of sense. And Kevin, this whole argument, or your whole argument for the institutional adoption and macro adoption for Bitcoin, I think it's worth noting. this is doable without any changes or innovation to Bitcoin itself. Is that correct? Like, we don't actually need Lightning for anything that you're talking about to really happen.
Yeah, no, absolutely. And I think, and this is probably going to be one of the more controversial takes, but, I don't think looking at Bitcoin in terms of, medium of exchange metrics or Lightning, obviously a very large proponent of it. I think, making it not only easier, but, more accessible for people to even play around with Bitcoin is always something that I'm going to be a strong proponent of. But I think until, in order for Bitcoin to become this, kind of medium of exchange that's used globally, right? I want to stray away from kind of a universal, again, one ring rule them all currency. But I think in order for it to do that, it needs to hold a tremendous amount of value, right? We're talking in the trillions of dollars worth of value for it to become, this kind of, universal unit of account or medium of exchange. And until we get there, I definitely think that the store of value arguments, has to go through kind of that store of value phase, prove that it's a good, strong store of value before we can get there. That's certainly kind of how I'm looking at it. So again, things like Lightning are awesome developments and something that we track closely and certainly can help grow the awareness of a lot of the really cool ways in which people can use Bitcoin now. But I definitely think looking at it from more of kind of like a valuation perspective, I certainly think the argument for the store of value narrative is much stronger here in the next, let's call it 5, maybe 10 years until it can really accrue the value that we think it can. And then it can serve as a medium of exchange where things like Lightning are extremely important, because this kind of shifts into that argument of what happens when you have, some of the block rewards obviously reduced to, next to nothing. And then eventually, 100 years from now to, actually no Bitcoin for people who are mining. And can a transaction, kind of fee market sprout up? And we won't, go down that rabbit hole, here, but I definitely think it's possible, assuming that you have, things like Lightning Network built on top, and kind of the base settlement layer for Bitcoin is more used for, high value transactions, which obviously come with higher fees and make sense for whether it's multinational corporations that are using it or high ticket transactions that people are sending back and forth. I think that's kind of how you could potentially get there.
That's amazing. And a few last questions for you, just to round out the discussion. Peter Schiff and Nouriel are obviously, have really smart people, but they have their own views here. What's your take on the whole gold versus Bitcoin debate? And I know the whole conversation today has been a lot about those comparisons, but I guess it comes down to more of a personal or understanding issue here. And you've spoken a lot about your thought about a knowledge moat, which I love internally. Mm-hmm. I don't know if that plays into this or not, but how do you kind of think about, getting these guys involved or convincing them?
Yeah. So it's a tough debate, right? Because I'll take the latter part of that, the knowledge moat. And this is kind of just a theory I've kicked around, which, I wouldn't even call it a theory necessarily, just something I kind of like to say when talking about let's call it the traditional kind of finance or Wall Street type of investors and how they're looking at this space. Even I'm sure you went through the same thing, when we left our jobs in equity research, there were a lot of people who were very excited for us. I mean, majority of people were excited for us. It was a great, exciting new endeavor. But there were certainly, the handful of people that looked at us and thought we were crazy and said, you're, throwing your career away. Something that could be, certainly very promising, because that's kind of, what they're accustomed to or what they're used to, right? So again, if you're a kind of an equity portfolio manager and all of a sudden you're getting a ton of questions about Bitcoin and crypto and all this stuff, well, you're almost kind of you almost have an incentive for it to fail, right? Because whatever prominence that it rises to and kind of steals some of the spotlight from, now you're getting questions on this entirely new emerging asset class that you likely don't have any real understanding of yet, because everyone starts off at that kind of ground zero point, right, where you don't understand nearly as much as you do now about crypto and Bitcoin and the potential value proposition that it offers. Now you have to go learn this entirely kind of new emerging asset class. How does that fit into whether it's an equity portfolio or if you're a larger institutional investor, how does it fit into a multi-asset portfolio? And it's just kind of almost seems like a distraction, right? So when you think about knowledge moats and kind of the ways in which people have built around them, whether it's market strategists or whoever it may be, they have a very kind of defined way in which they look at things. And obviously markets are always changing. But something like Bitcoin and the idea of crypto is just so radical that I think it certainly threatens the knowledge mode of a lot of people. And they're by nature hesitant to change and just, simply wouldn't want to succeed because they don't want to have to go through the process of going and learning an entirely new asset and figuring out how it kind of plays into what they already know and what they're used to covering. So kind of shifting gears, I definitely think that, again, the argument between Bitcoin and gold is tough. I think there's good arguments for both. And if I was looking at, gold in isolation without Bitcoin, I definitely think that the backdrop for gold is certainly a good one here. And it's ripe for gold to outperform as well for a lot of the reasons that I listed. But I think kind of the key here between, Bitcoin and gold and why they're complements to one another is, when you look at something like gold, I think the big kind of differentiator, at least in my opinion, is the censorship resistant aspect of Bitcoin, right? The fact that it's, not only much more portable, but I mean, if let's say you're an investor, an institutional investor, if you're holding whether it's a gold, fund or a gold ETF versus holding, let's say, a Bitcoin ETF, whenever that comes along, you want exposure to the asset, but maybe you're not even necessarily holding either, right? Like actually physically holding either. So maybe the physical delivery of gold doesn't even necessarily matter to you. The portability of it doesn't necessarily matter to you. You're not so concerned about the centralization or decentralization aspect of it. I think what's interesting is the censorship resistant nature of Bitcoin, right? So that nobody can seize it. And I think this is kind of a big value proposition for a lot of the world's kind of wealthiest individuals who are probably going to move away from something like a Swiss bank account, or at least allocate more of their money into something like Bitcoin, is because you actually have true control over it, right? And you can't have a government come in and say, even though the likelihood is low, you can't have a government come in and seize, the gold that's being stored in a vault or something like that. You can have your Bitcoin seized because it's not in a vault, right? It's in cold storage, or you actually, own it and have ownership of it. So I think that's kind of the big key difference. But when it comes to kind of the institutional understanding of it, oftentimes I'll kind of put it relative to gold to help them understand how this macro backdrop certainly kind of sets up the bullish case for both.
That makes a lot of sense. And switching gears to get your take on something new, I mean, Facebook with Libra rolled out, and this is obviously something that has a potential to be a real global currency, because you have Facebook, which already has over 2 billion users, tacking on a crypto, whereas a lot in the crypto space are doing that in the reverse. What's your take here? And the only reason I ask is because we saw a letter come out today from Congress or the House of Representatives, I don't remember who, and basically they said that Libra has the potential to create an entirely new global financial system and rival U.S. monetary policy. What's your take there?
I mean, that spells out. It's funny when you think about, Libra, and we'll bring Bitcoin back in the conversation there too. I mean, that literally spells out, Congress and the U.S. government waking up to the potential effects, the real potential effects and the damning effects of, crypto on, again, the dominance of the U.S. dollar, right? And U.S. monetary policy. I mean, they literally spell it out in that letter. And so I definitely, I wouldn't consider, as we've talked about, we wouldn't consider Facebook's Libra to be, cryptocurrency by, any traditional definition. It's much more kind of a digital currency. But I think, having that massive user base, right? Over 2 billion people that are on Facebook that potentially could be exposed to this from day one. And then having Libra with the wallet, and if that, natively is able to support other crypto assets like Bitcoin and Ether, and even some of these other, smaller alternative crypto assets, I think that it's tough to imagine how that doesn't accelerate the adoption of broader crypto and the exposure to something like Bitcoin, because, again, the seamless way in which people could get exposure to it, whether it's from an investing standpoint or just, buying Bitcoin, a small amount of it to try and use it or transact in it. It's tough to see how that wouldn't accelerate and be, arguably one of the largest accelerators for or catalysts for, global kind of adoption of, Bitcoin and crypto more broadly. So I don't even think, they're apples to oranges or, apples to airplanes at this point. When you talk about, Libra versus Bitcoin, you don't necessarily even put them in the same sentence, because they're going after very, very, their purpose is very, very different. They're going after very kind of different target markets, I guess you could say.
Yeah, no, I totally agree, Kevin. I definitely have my views there. I definitely don't think it's a crypto, but it could be large for the space, but we'll save that for another day. My last question for you, thinking out anywhere from 10 to 100 years from now, Do you think that something like Bitcoin could kind of transcend cultures and governments and be the thing that really connects the global population into one, real world and culture? Or do you think that might be way too much of a jump when we think about this?
I certainly, without getting too kind of existentialist here, I definitely think it could unite cultures around, let's say, again, it being recognized as a unit of account to a certain degree universally, right? And again, that's not to say this would be, a complement or rivaling the U.S. dollar and the euro and all these other, even smaller currencies. I definitely think it has the power to do that. And I think, again, if you look at going back to kind of the return potential of holding Bitcoin or getting in on something like Bitcoin, you're really betting on this kind of change or shift or paradigm shift in, kind of monetary backdrop or monetary system that we've all become so accustomed to, right? And it's easy to say, here sitting in the U.S. where we haven't, at least in our lifetimes, really come across a dollar crisis or a currency crisis. We don't know what it's like to experience, being an economy experiencing hyperinflation. And we're fortunate enough to sit there. And so I think that's also kind of plays into, why some people kind of downplay the long-term potential benefits of something like Bitcoin is because they don't necessarily, they can't put themselves in that person's shoes who would potentially get real kind of use out of this, right? And so I think, if you look at, let's say, more emerging or frontier markets, those types of currencies and people exposed to those currencies in those markets, I think they could certainly find a ton of value in Bitcoin. And that will almost kind of unite cultures in a sense because they have one kind of, non-sovereign asset that they can almost rally around, or they can, tell their relatives or family members or close friends in other nations if they're sending, remittance payments back and forth. It can certainly make things a lot easier for them and actually give them some type of outlet that they otherwise wouldn't necessarily be exposed to. With other, fiat currencies today. And again, getting a hold of something like gold is certainly, easy from an investor standpoint. But again, when we talk about actually storing your wealth in physical gold, especially if you're in one of these, emerging frontier markets, that's just, oftentimes not really feasible, right? So I think there's a ton of things that are going on that certainly could make that a possibility in, 10 or 100 years. But I mean, hey, if Bitcoin does what we think it can do, I mean, the next 10 years are going to be extremely exciting in this space.
And yeah, it's extremely insightful to think about, just global connection and organization, especially when it comes to cryptos. And Kevin, to close out, what are you working on? Where can people learn more and follow you? And what should they be excited for?
Yeah, so obviously, give Delphi Digital a follow. I'm on Twitter as well. Kevin_Kelly 2. I am the second, not a junior. I'll make that clear. I always get that. Is there any difference? And I'm like, I honestly don't know. I've always just I was the second, from a young age, so I just kind of stuck with it. I'm on Twitter, LinkedIn, do a good amount of stuff on LinkedIn as well. And definitely sign up for our Delphi Insights product, put together a weekly market commentary where we talk a lot about, obviously what's going on in the crypto space with Bitcoin and some of the larger alternative crypto assets, but also kind of try and put a macro perspective around things. And as, we've talked about, for the last, 45 minutes to an hour or so, the macro backdrop right now is extremely exciting for, somebody who's interested in whether it's, holding Bitcoin, investing in Bitcoin, or just learning more about this space. So definitely follow us in a number of different mediums.
Yeah, I'm biased, but I love the weekly you put out, Kevin.
Appreciate that, bud.
Thanks for coming on, man.
Thanks, man.
Hey everyone, thanks for listening to the episode. If you learned anything, please share the episode on Twitter and LinkedIn. Feel free to tag us and visit delphidigital.io to learn more about our research.